The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host for another day in a choppy market. Today, we're up a little bit, 9 points on the S&P cash, 2.2 billion shares. So volume a little bit better than it was yesterday. Not enough to have anything that I could call escape velocity. We do have the NASDAQ at all-time highs. Of course, most of the earnings were not that good. And basically, when they said that they were guiding down, the people and traders on CNBC said, buy this dip. You must buy. Buy, buy, buy. And, of course, looks like a lot of people listened to him this morning, started buying. Part of this may be an all-out assault on the dollar. We've got the dollar index off a bit, 0.7%. 79.24 on the current continuous contract for the dollar index, but certainly down. So there continues to be some weakening out here of the dollar. It looks to me like it's certainly a competitive devaluation in the works. They're trying to keep this thing under 100 on the dollar index, at least as far as I can tell. It looks too coordinated from too many different central bankers out here that they don't want this thing breaking through just yet until we have at least some time to digest the move in the dollar so far. But very tough for any economy, including the United States, to hold back the unhold backable, which is the dollar finding its true meaning and purpose in this world, and the price that it gets at that level. Anyway, we're up to 10 points on the S&P cash. Volume is okay. It's not fantastic, but good, better than it has been. I suspect a lot of early shorts or shorts probably blinking today. A lot of contrary indications in this market. And I continue to see a lot of stocks with blow-off tops headed lower. We've got some stocks headed higher. But we will talk about that more.
That it's all just a little bit of history repeating.
On this day in 1985, amid huge fanfare, and I remember it, the Coca-Cola boss, Robert Koyesu, I don't know how to pronounce his name, introduces new Coke at the Vivian Beaumont Theater in Manhattan's Lincoln Center for the Performing Arts. The best, he declares, has been made even better. When it becomes clear the company is replacing its original formula, the natives become restless and they grab their pitchforks and head for the Bastille. Rather than offering new Coke alongside it, the company's Atlanta headquarters deluge with thousands of angry telephone calls from consumers. I need my Coke. I'm addicted to it. It's my crack. Give it to me. And, of course, it didn't last all that long. And one of a long line of failures in marketing, along with this is not my father's Oldsmobile. A lot of other things like that were kind of a lot of stuff blew up in people's faces. But on this day in 1985, they tried the old bait and switch. And, of course, I think that was the first time. I think back then it had actual sugar, and it was part of changing the formula, was moving to that corn fructose syrup back then, and that didn't kick out. I know I've got a friend who, when he goes to Mexico, buys a bunch of Coke down there because it still has actual regular cane sugar in it, and smuggles it back across the border in an act of defiance against the man. But I do digress. I've got other things going on out here. Got my hair cut last night, and pretty weird stuff going on out there.
And now, deep insights and random thoughts.
I got my hair cut last night. I don't know how old this gal was that cut my hair. In 20s, I would imagine. We got to talking about some variety of things. And I told her about the Monkeys TV show and how we had that to thank for MTV, which, of course, ironically doesn't show videos anymore. Just a bunch of bad reality TV shows. But she knew what a video was, apparently. We also talked about some other things. We talked about the Monkeys. She'd never heard of them, or the Partridge Family. And I started telling her about how I had my hair cut. And around that 1976 level, had it just like David Cassidy. Everybody had the feathered hair back. And she asked me if there were blow dryers during that time. I've never felt so old in my life. Were there blow dryers in the 70s? I told her that, yes, we had running water and toilets. Beyond that, we had an abacus. There were no calculators or anything at those times, and a slide rule. But I do digress. That was one thing that kind of drove me insane. But I felt kind of old. I feel it's still dragging on me. Just if you've got some kids out there, just tell them to be easy on us. Occasionally, those deep wounds don't heal fast. But I never felt as old as I did last night.
That was Deep Insights and Random Thoughts.
Yeah, it was random out there. We don't have a lot of news because there is so much news from earnings, so we're going to get into that as quickly as we can. Let's go back to some of these stocks. We'll go through them. Probably the most interesting to me out here is Apple. We talked about this thing going through its asymmetrical triangle. If it went higher, that would probably be the most bearish thing. And maybe you got another 50 cents or a buck on this thing. If it then pulls back down, that would be one of the most bearish signals, signaling that it's headed back to the 110, 115 area. And, of course, it's still being 14% of the S&P, or 14% of the NASDAQ, and a big portion of the S&P would be a big issue. But this pattern works about 80% of the time. It's one of the better signals out here in this market, and that is breaking a asymmetrical triangle once it's gotten 3/4 of its way to the apex. And this little pop out here today, the bullish thing would be a low volume move down. Instead, we got a low volume move up, a move back into that triangle, which, like I said, would be about like 127 or so, 126.50. Look for that in the next couple of days. If it does, it means that Apple is, at least in the short term, problematic. Apple, of course, always has the usual suspects. Anytime it looks like this market is weak, they go out and juice Apple once again. I'm mixing a little metaphors out there, aren't I? Of course, now it is some quote people who know margins for the Apple Watch. Also, some other rather dubious sources of news on Apple pushing it around today. What we do have, though, and what we do know is that were we up here in this last price level last time on the 30th of March, we had 68 million shares. Today, we've got about 27 million shares so far. So can it still get up to 133.60? It could. Usually, that's not part of this asymmetrical pattern breaking. You basically get 1 or 2 days of upside to this, and then it comes right back down if it's going to work. And I'm not playing it because there's not a whole lot of money to be made on Apple, but I would be watching that very closely for any pullback and sign. Last night, Facebook was down, I don't know, about 82 bucks, I think, after hours. And the traders at Fast Money on CNBC said that you must buy this stock. You must dive in there. And, I guess maybe they had a nice one-day move on this thing. Listen to the conference call. Of course, they're saying that a great deal more of their profits now come overseas. And guess what? The dollar is killing them. And I don't think there's anything more to say about that other than the fact that they've hired a great deal more engineers, and it doesn't look like that's going to go away anytime soon. So profit margins are going to fade, and at least for the next year, they're not looking at those changing. So if you were betting at with some kind of ballistic arc for Facebook's basically profits improving in the next year, you would probably be on the wrong side of that. Basically, from what I reading from in the tea leaves, what they said in between was, we're working on some big stuff. It's not going to pay off for a while. And in the meantime, we're going to have all these new folks out here working on these things, and there won't be a lot of money coming in from them. And everybody's going to mobile and not spending as much time as they had before. And we're putting out a lot of videos. That means they're watching the videos and not doing Facebook stuff and watching our ads as much. So kind of lukewarm to middling. The question is, even if you believe the upside on this stock, do you want to hang around a year while this thing goes sideways? And that's it. Boy. See what other ones out here. A few stocks I wanted to look at out here besides Facebook. Google, after the bell tonight, of course, thinking it's getting a lot of juice. Getting a few shorts rolling out of the stock pre earnings, but I think that had more to do with the market push itself than anything else that we're looking at. You know, it has a high volume high out here at 581.88. I've never liked shorting Google. Their earnings are kind of transparent and easy for the street to figure out. Probably a little tougher for us, but they pay for the inside information from a lot of companies that know it, and it's Google's way of making money is fairly transparent. They're pretty good at figuring out what the truth is on Google. Of course, we went through last week with a lot of haranguing about the European Union and them coming after them. But like I said, I don't think there's a lot of there. Is it going to hit 581 after the bell tonight? I don't think so. But basically, options show that this thing has a fairly wide range, but it's pretty pointed. And my guess is this trades somewhere between 550 and 555 tomorrow. This is one that seems to be set up for a lot of people expecting a big move and not getting any whatsoever. Pulte Group, we talked for the last few days about all the Gartley patterns in these housing stocks. Well, the chickens have come home to roost.
I informed you thusly.
Yes, I did. I informed you thusly. Thank you, Sheldon. Of course, it's already pierced the low from December 17th that had 5.6 million shares, with almost 4 times that much as 20 million shares.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. I have a problem getting my home builders list up here, but I want to take a look at these real quickly. Of course, housing numbers came out, and they were a little soft, and that kind of started the market moving a little higher, and I think we had a little dollar intervention, and Pulte basically got everything rolling out here. When we look at Ryland, it's down 4% or so, and decent volume. It's got more volume than the last major low, which was March 11th out here at $43.76 on March 11th. So probably heading there on Ryland Group if nothing is significantly different than that. What do we have? DH Horton off 2%, Hovenian off 3%, KBH, which was another one that had a Gartley pattern in it, down fairly significantly. This one probably going to have better support at about 14.5, but it's off almost 4%. Lennar off 3%. LEN. And this is back in the trading zone. One of the things I disliked about this one is that when it broke above the mid-48s, it should have had a high sign of strength, and it didn't. It had kind of a weird sign of strength, or at least a volume, when it broke that level on 319. It kind of shot up and closed back in the trading zone again. When we started going up for this last leg, there was no energy really to speak of. And interesting ad nauseum. Let's see what else we have out here. Let's take a look at Toll Brothers, TOL, off 3.375% out here. It's blown away its previous low on March 6th, $36.62. And it's below it on major volume, going to be double or more out here in the housing sector. So we've got that going for us. Other things of interest out here on the bright side, I'm going to have to play Mr. Brightside. Oh, Mr. Brightside. Mr. Skechers out here, nice move higher. Kind of weird because I think if this is right, I'm missing last day out here. I don't know why I'm not getting the 23rd. Huh. Well, let's just type it in here then. SKX. And the change is up $10. That's 14.2%. And you got to say it's a sign of strength. 4.5 million shares already. So everything that you'd want in Skechers. We'll come back to that one and see if that doesn't clear up. What else do we have out here? Texas Instruments casting a pall on most of the stocks out here, down with fairly major volume. And I don't know anything other you can say about that, but down with major volume. Already broken the March 26th low at $54.62. That had just under 7 million shares, so we're already twice that. That opens up the next order down, which is January 6th at $51.72. That had 5.4 million shares. Pretty easy to see that this thing, if things don't get better in the next quarter, is headed down to $50. XLE, of course, kind of interesting out here in that everybody is pushing oil and not getting much of a bounce and not much volume out here in the XLE. You know, you've had a couple of hits up in this mid 82 area. We're back in there today. And every time you get back up there, the energy just really starts to pale out of the XLE. Of course, you've had that big volume down gap, and that came on 42.5 million shares. And that's what we've been trying to chew through back up in this XLE sector, but it doesn't look like we've got a lot more out here today. I wanted to look at a couple out here just to see how they're doing. MHK, which is the carpet company. MHK, he said. And, of course, Buffett runs this thing, but doesn't look like it's getting hit near as badly as some of the others. Had a lighter test of the top, but not that much of a big volume move out here. So we've got that moving for us. Give me a call, 877-927-6648. Email me at path@tfnn.com, and we'll answer your message. Or post a message in the den. I've got a couple of people asking. We're going to get into Intuitive Surgical and a question on the S&P. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, and if you're watching on Tiger TV or in the Den, I've got the list of the stocks I look at least in the housing business, and the only one that's probably not doing so really bad today is Armstrong Worldwide. Of course, they do flooring, and maybe that has a lot to do with the weakness of other flooring companies like Lumber Liquidators that's already in the doghouse. USG, which is kind of weird, up 1.16% today. And, of course, they make drywall. So I don't know if someone's expecting a flood. But housing stocks not looking much better, but probably the strength in the Mohawks off 2%. But that's probably the best in that whole sector out here. But down rather substantially. So I don't know what else you can say other than that. But numbers this morning were not good. I think it was 480, and that's headed back south in a big way. I suspect a lot of people have been pushed into buying homes thinking that interest rates are going to go higher, and basically everybody's already in, or as many people are. There'll be new people always coming in. But, maybe we've hit the high water mark in that part of the market. Anyway, we were looking at a few of those. What did I want to look at? I wanted to look at Hershey's. Do I have that up there? HSY. Everybody likes a little bit of chocolate. This was down rather significantly. A lot of people have jumped back in. It is broken back through the previous lows. One of the things, though, is interesting is this one is kind of broke through what should be fairly decent support, the January 29th low at $98.73 with 6 million shares. It's only got 2.3 million shares out there today. So if you were going to be buying one and you saw that kind of spike down there, if it's real, to 93.82 today, may not have been a bad play out here. This thing's probably at least going to try getting back up to 98.73 in the near future. What else did we have out here? Maybe Skechers. Oh, okay. Now, Skechers, I've got a quote on it. Up with heavy, heavy volume. And see if there's anything else out here. This thing is just completing its second monster ABC. And I don't know if you can say anything other than that. But, yeah, I mean, it went right to it. It went to 87.10 today. The 1-to-1 took it to 85.99. So you got the completion of that move in the 1-to-1. If you get extensions, that's 100. And 1-to-1.5 is 105. And a 1-to-618 is 109.62. I guess there's a lot of money in those tennis shoes. But I'll do a little zoom up of it a little closer here. But, boy, do you have some nice moves out here in this thing. And, of course, you have all the volume I suspect you need in this tennis shoe company. Okay, we had somebody asked for ISRG. This company does not look good, but I have a belief that the reason why is this is all about headline risk in the near future. One of the reasons I could not play this, unless you had an abiding belief which way the Affordable Care Act was going to go in the U.S. Supreme Court, or SCOTUS, as it's known in its abbreviation, it would be very tough for me to play this. It is going to have a huge move off that. And last I heard, it's May. I think we're going to get the hearing in May for the SCA. And that's going to make a huge difference in what happens. The reason why is that they've been one of these companies that's made a lot of money, and that's angered some in the current administration. And they've gone after this company a couple of times, trying to beat down the amount of cash that this company makes. They don't like robotic surgeons, and they don't like, it's kind of like being a fracker. They just don't like them. They don't like them. They don't like them. They make money. They don't like them. And it's got to be one of these things where you have to think it is problematic to sit on this one through any potential news coming out of it. After it did, I would say the longer term on this thing is a big trading range between these gaps, probably around 450, and these highs that we just saw here before earnings at 560. So if this would go, if the SCA is shot down, my guess is that we would see higher prices in the stock. And if the SCA is shot down, higher prices. If the SCA is affirmed, then is that right? Affordable Care Act, ACA, excuse me. Then this thing could have a nice downside to it. So headline risk out here, tough to see. Where do I think the S&P is going? I've been thinking that we're going to get some kind of surprise out of the market. We're about 5 points higher than I thought that this thing would go on a breakout of what I thought was a poly trend top. We don't have a closeout here yet today. One of the things that we can do, though, is approximate what the PE of the S&P 500, the mean, would be. And I did that this morning with the updated earnings and updated earnings numbers. We're at about a 21 PE for the stock market. Doesn't mean that we won't go higher. It does mean, though, that you are going to be paying more than anybody has paid for a stock with its earnings in the last 40 years. Now, maybe you could make a case that the Fed is never, ever going to raise rates. and therefore eventually these stocks will grow into it. But my guess is that the reactions we've had to the most of these stocks is probably correct, and I think we're probably looking at one surprise to the downside tonight. Maybe it's Amazon, maybe it's Google. Right now, everything doesn't show anything, but we've gotten enough. And then, of course, we've got earnings tomorrow, and then we get into earnings cycle again all next week. But I don't see anything that changes a higher dollar, at least let me put it this way. At best, that 96.30 area is massive support on the dollar, and I can't see that changing anytime soon. And at least the next quarter is probably going to be highly charged with the dollar flipping around here from 96.30 to 100, or just under 100. And I can't see that changes a lot. A close back under 2010 would be a very bearish signal today. A close over 21.22 would be a fairly bullish signal out here. The volume, though, has died as it has in the afternoon. We just have 2.5 billion shares as we go into kind of the last big stretch of this show. Guess we've got a small stretch, just making it around the last corner, the home stretch in the next segment. But I can't get fired up about huge profits and massive stocks going higher anytime soon unless we go into a full tilt bubble, in which case the Fed will have to throw some cold water on it. So at best, I would say stock picking. At worst, we have a market that could have a massive correction on just the hint that they actually will do anything to raise rates, because this market right now seems to be priced for absolute perfection, at least at 21 average PE. And that could go, we still have enough stocks to come out. Maybe that changes a little bit, but at worst, we end next week with a PE, median PE of 19, and at worst, maybe a PE of 23 going forward into the next quarter. So this isn't we're in pretty lofty territory. As if you've heard, I've talked about it before, sometimes markets just go nuts. But I would say that if you are going to be trading any time higher out here, I wouldn't be sitting on positions. I would be moving in and out of them as they pop and give huge moves, because my guess is the most of them will not. We'll see a lot of sideways action, and one stock pop, 10, 15% in a day. You'll need to take your cash and run. And I don't know what else you can say about that. 21.16 on the S&P cash, 2.5 billion shares on the New York Consolidated Tape. So we'll continue to keep an eye on that. Other stocks of interest. I wanted to get to the stocks that I had in my scans here that I want to look at. Before I get to that, I wanted to get to the uranium stocks, because there's a lot of news in those as a political bank shot. I'm trying to remember which stock is the Canadian stock for uranium. Maybe somebody in the den. What is it? CCJ, thank you. I wanted to take a look at that today and see whether what's going on. But it's up 2%. There's going to be apparently a book out next week about financial dealings in politics. And we all know what politicians are. But apparently the news out today is that there was a lot of money changing hands for a Russian uranium company to get into Canada. And what I think is going to happen is we're going to see a lot more investigations and dig into just how a lot of this money changed hands in the near future. And I'm not exactly sure that we're going to see all these companies with their hands clean in this. But CCJ up 2%. I suspect a little bit is because of this, is because of a company called Uranium One, which is a Russian conglomerate that apparently threw a lot of cash around. And apparently a lot of people drawing lines on this cash coming in and a change in policy from the State Department, and may or may not be able to draw direct lines. But my guess is that when you have people that normally represent fairly strong political beliefs going against those in the major newspapers, that they've got embargoed copies of the work that this gentleman did, we're probably going to see a lot of issues where these companies were trying, and foreign nations too, where it's going to be very hazy whether they were buying political favor in a lot of different areas. But look for that news next week. But watch for CCJ, because I have a feeling that it may be the beneficiary of the bad news for uranium one and the Russians buying off political favors here in the United States. So who's saying lies about the Clintons? I don't know. All I know is that they've tracked this money, and apparently this company did send money politically. I don't know who to. But that's one of the reasons why CCJ's up there. Okay, what else do we have going on here? Oh, that was one thing. I want to look at some of these other stocks moving. STEM, if you've looked at any of the information lately, of course, China basically came out and tried to get some articles published in U.S. scientific journals. They would not accept them because they were too Frankensteinish. Apparently, the Chinese have been highly at it to go after and modify genes in a human egg. And that's spooked a lot of different people. But you know, this one's not a big seller out here, but I have a feeling that the days of stem cells and those stem cells companies are probably long gone. This one pierced its previous low from December 17th on 620,000 shares with 1.4 million shares today. So we're probably going to see a great deal more out of these stem cell companies, maybe going bankrupt in the near future, mostly based on the CRISPR technology that I talked about with Tom O'Brien in the Tech Insider Hour. It is rather scary in a brave new world. The real fear in China is that they will make sure that no females are born, which seems to be the whole gist of this, because no one wants any females, as they're looked at as worthless in China. But that's in the subtext, and what they're not really saying in the news about all this technology is a great deal of it is just that they want to make and guarantee that they have male childs, and it's interesting. There's a huge business of importing women now because there aren't any females to marry in China, and this would just make it worse. But, kind of interesting. Anyway, when we come back, we'll look at a few more of these stocks, see how they're doing today on mine. When we get back, we'll look at Dries.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. I'm going to look at a few more of these stocks. I'm just checking my mail here, make sure I didn't get anything. Of course, you still have, if you're quick on the draw, you can call it 877-927-6648 or post a message in the den if you want me to look at something. Dries, we were going to look at that. And, you know, we've got a fairly, I mean, I don't know if what the financials on these companies are, but when I go in to do the Tech Insider tomorrow, I'm going to have a chance to beat on that Bloomberg terminal of Tom's, and I'm going to look at the stock because this does not look bad. This is actually one of the better looking stocks out here. I know when prices get as low as they can, the Chinese like to buy a lot of stuff, and of course we've got all these commodities at fairly decent lows, but you know, basically going up 10 million shares against 6.8 just a few days ago. You got a few dojis out here. Energy has really come out very nicely back out here, and I think we could see the market turn down and also see the Chinese buy a lot more iron and coal and other things into some of these dry shippers. But it's kind of tough to look at these things and think that you'd buy them here, but starting to look like not a bad bet. So I'm going to keep my eyes on those if the markets do turn up. if they are not good, I don't think that dry ship's going to do any better than the rest of the country out there. To Phillips 66, been watching this closely in the energy sector to see whether this could get any energy today as it goes through the February 25th high, $80.59. 1.8 million shares today. So what do we do? 2.3 maybe, 2.35. And we're going to close higher out here, but no real sign of strength, and volume going to be light. OFC is another one out here. This one is actually making a test of a low, and some of these REITs have come down fairly significantly. This one doesn't look all that bad. 2 dojis out here in a row against the March 6th low at $28.26, 1.4 million shares. Yesterday we had 465. Today a little bit more volume, but kind of at the same price point, so it doesn't look all that bad. What else do we have out here? Amazon, of course, this one looks very interesting. We had better volume in the last high 2 days ago. The real key is this huge gap down that we're beating against, and that came down with 16.2 million shares on the 31st of January. So we got 16.2, and we're basically going up against that gap down at about a fourth of that volume, which means that it's probably going to take a while, even if it's going higher, to chew through all those bag holders that bought at the highs that are just glad to get their cash back when this thing took a beating. But more interesting than anything. Kind of following up on yesterday, Amgen, where we saw this one beat against highs. Of course, this one really, the one I was looking at was the March 20th high that had 9 million shares, 172.36. Went up against it yesterday with 5.3 million shares. So basically, what, 55%? Closed back in the trading range, kind of doing a little sideways action out here. But one of the other stocks that looks like we could start seeing a top happen sooner rather than later in the IBB, which we'll keep an eye on. Just a quick, well, certainly don't have a lot of energy in that. We're into that gap. Yeah, I don't know. It's going to be Friday. We're going to know a lot more about this market tomorrow. See you tomorrow. Same bat channel, same bat time. Sell when you can, not when you have to.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.